I went slightly out of order today with our intro, but that's okay. Good morning, everybody. Spencer Israel here. Welcome to the morning show. I've got JC Parets. I've got Steve Strazza. They're lurking backstage. They're ready. We got a great show today. We'll be joined at 9 o'clock by Brian Lund. You know him from the Lund Loop. We'll be joined by Kimmy, Sokoloff at 9:15. We'll be joined by Culley, head of FICC at All-Star Charts at 9:45. So we got a lot going on. Smash that like button. Hit subscribe. Tell your friends, wake up your neighbors, do all that good stuff. Let's bring JC and Strazza on the show. Steve Strazza, good morning. JC Parets, good morning. How are we doing today?
What's up? What's up?
It's Friday.
You know what that means, Strazza? What does it mean that it's Friday? Why is that relevant?
It's Crypto Friday. I'm wearing my bull market shirt. Let's go.
Ooh, Crypto Fridays, baby. So, this started I don't want to say many years ago. This probably started a few, 2 to 3 years ago where, I found myself just having more crypto meetings, Web3 data meetings and things of that nature. We started doing our conference calls for crypto on Fridays. We'd have our internal meetings. And that was definitely not done on purpose. It just kind of happened and we went with it. So happy Crypto Fridays. So here on the morning show on Fridays, we're going to have a slight tilt towards the crypto market. It's not going to be all things crypto, all crypto every Friday, but it's going to smell a little differently. How's that? How'd I do?
I mean, you know me. Crypto Fridays are my favorite kind of Fridays by far. And I love it. And I think we're going back to a place where people are going to be talking about crypto a lot more. And I see a nice base in Bitcoin. So
I don't know. We're gonna have to talk about that in JC's State of the Markets. When is that happening there, Mr. Spencer?
Wait. I have a little Crypto Friday thingy-major. Can I play it?
Yeah.
Yeah. I wasn't sure when, so I'm just gonna do it right now. All right, for real, let's go into state of the markets. I just wanted to play that because
I like that. Not enough orange, I don't think, on that intro. Maybe we sprinkle in some more orange, right? I guess Izzy didn't get the memo about the orange pill.
All right, state of the markets. Let's get your charts up on the screen here and walk us through what you're seeing.
All right, throw up the tech and Bitcoin. That's probably a good place to start right there because it's one of the more interesting divergences that we're seeing in current markets. That I think is definitely worth paying attention to. And what are we seeing? We're seeing, these long duration assets, right? When you talk about technology, you're talking about companies. These are growth stocks. These are companies that, they're not going to, right? Strazza, do you want to touch on this quickly, in terms of the fundamental aspect of that long duration? When interest rates are falling, money flows to those areas. But when interest rates are rising, these companies that are not set to earn any money for the next 5 to 10 years, with interest rates going up, those multiples contract tremendously. The fundamentals change dramatically. You want to touch on that for a quick second without getting too fundamental on us?
Absolutely. I mean, you basically said it right. And it's not even that the fundamentals change. The fundamentals could stay the same, but their valuations change, right? Because it's really just a math equation. The way that you have to value those future cash flows is by discounting them, and you use whatever the going interest rate is, right, to discount them back to a present value. And the reason that you have to do that, and the reason that's more of a thing with growth in tech stocks, is because they have cash flows way out in the future, right? When you discount them back at higher interest rates, they're just worth less money. So that's really what you see. That's why you get that real pressure on tech and growth stocks in a rising rate environment.
Yeah, and you saw that pressure in technology and Bitcoin and other growth assets throughout the back half of 2021, 2022. Interest rates were rising. And then a funny thing happened in the fourth quarter there, Mr. Strazza. Interest rates stopped rising and started to fall pretty dramatically, as a matter of fact, and to the point where interest rates have fallen so much that technology is making new 52-week highs. You know what? I've gone back and studied a lot of bear markets and, throughout history and a lot of downtrends. And, one thing I've noticed is that, you really don't see a lot of new 52-week highs in those environments. New 52-week highs historically are a characteristic of uptrends, almost like by definition, right? So we've seen tremendous appreciation in the prices of growth stocks. Here's technology, like I said, making new 52-week highs. The NASDAQ 100 making new 52-week highs. But Bitcoin is not, right? So this is one of those divergences. And there are a few out there that, we're sort of questioning at this point and saying, all right, Strazza, is this divergence here to stay? The divergence between technology and Bitcoin, or should we expect some weekend appreciation here in the old BTC catching up to technology, or is technology going to catch down to Bitcoin? So 3 options. Bitcoin catches up to tech, tech catches down to Bitcoin, or the correlations are changing. Which one do you think it is?
I think Bitcoin eventually catches up, right? I mean,
Yeah.
going back to the beginning of the year, Bitcoin left the station first, right? So I think we got to give it the benefit of the doubt here. It already resolved higher from its base. Let it do some backing and filling, let it cool off a bit. It's, it's doubled off of its lows from last fall. So yeah, I think we need to be patient with it.
Yeah, for me, I'm looking at that 30,000 level, 30, 31. If they can stick that and Bitcoin breaks through that, I think that would be a huge development. I will be adding to my positions very aggressively in that sort of scenario. So to me, crypto Fridays or not, I think this is a really important chart. Taking a step back away from crypto for a hot second, sticking with that growth, tech exposure. The NASDAQ and the S&P 500 have a tremendous amount of exposure to technology and growth. The NASDAQ, much more obnoxious in that respect than the S&P 500. But nevertheless, the S&P 500, I think the NASDAQ 100 is 50% tech. You got the S&P 500 is 26% tech. And just as a reminder, that tech sector does not even include Amazon or Tesla or Facebook or Google. None of those are tech stocks. Those are in the communications and discretionary sectors. So if you add those, now we're talking about the high 30s. So just a lot of exposure to mega cap growth. And I'm seeing the NASDAQ 100 closing at new 52-week highs, Mr. Strazza. Do you think that the NASDAQ is going to continue to rise and the S&P 500 catches up? Or is the S&P 500 slightly lagging the leading indicator here and the NASDAQ catches down? Which one do you think it is?
I think they're all going higher because we continue to see more and more of these bases complete, right? And like you said, the right groups are working when we're talking about the index. It's funny, right? Because people will complain only 5 stocks are driving the market, or it's so thin. It's only mega cap growth. What's the S&P 500? What is the NASDAQ 100? It's just mega cap growth. Really, that's what it is. So it's the same thing when you're talking about the market. You're in large part talking about these giant growth stocks and tech names. So we keep more and more bases go. I think it makes sense for the indexes to go too.
Yeah, and also we know that it's not just 5 stocks, right? If somebody thinks it's 5 stocks, like they're just really bad at basic arithmetic. Like we know, we have the data. We know it's not just 5 stocks. So if you think it's 5 stocks, like, like I said, check your math because it's incorrect.
We keep seeing more breakout. Let me say one more thing.
And by the way, more countries breaking out too. Like I feel like that gets lost in this whole breadth thing. It's only 5 stocks. If it's only, how many of those mega cap tech stocks are in the German DAX?
I was just
0. How many are in UK has a 0.0% weighting to technology. Denmark is making new all-time highs. France making new all-time highs. Japan making new 52-week highs. If it's only 5 stocks, none of those 5 stocks are in any of those indexes. So what are people talking about?
This is something I wanted to talk more with Howard about yesterday. I wanted to ask that specific question. We talk about how it's just tech and growth doing all the heavy lifting here in the US. Then what's going on over in Europe, right? Because it must be staple stocks and consumer stocks, dragging those indexes higher. So I think that's a big positive. Another thing I'll say is throw on chart 3. Yeah. We look at a lot of things for confirmation, right? We can look to peer indexes, right? So NASDAQ 100 just hit new 52-week highs yesterday, broke out, took out those August highs, right?
By the way, the 52-week highs is the highest in 1 year for those who weren't math majors.
Thank you. So we're sitting back asking ourselves, is this breakout a valid one, right? Are these new highs going to stick? We can look at things like overbought momentum readings for confirmation. We can look at peer groups and peer indexes and the price action there on an absolute basis. But we can also look at the relative trend. And there's really nothing I like to see more for confirmation than a simultaneous breakout in the relative trend. That's what we're seeing here. Whether it's tech versus the S&P, growth versus value, which is shown here up top in blue, any of these other growthy ratios, they're making new highs, they're breaking out, they're absolutely confirming the price action at the index level for these growth stocks. So
how about the fact that they were doing that with bonds falling this week and interest rates actually rising? When you talk about these divergences, To me, that's a big divergence. Like growth continues to outperform. Technology and the NASDAQ are making new 52-week highs despite interest rates not continuing to fall.
Not
like
only
that stands out to me.
absolutely.
Right?
That's like the biggest head scratcher for me right now.
All right, I'll give you another head scratcher. Throw up the dollar index there, Spencer.
But JC, not only is that a big divergence between bonds and growth stocks, but it's accelerating, right? Like yesterday, they were moving in opposite directions with momentum. So I think something's got to give there soon.
So here's the dollar index finding support at a logical area, right? Where it found support earlier this year. Understand when the dollar started to rally, February was a tough month for stocks, which historically is pretty normal, pretty accurate, right? So I remember going into February and being like, hey, look, if you're looking for a correction, this dollar strength would likely be the catalyst for a correction in what is typically a very corrective month in February. Sure enough, we got that dollar rally. Stocks struggled in February, came back in March when the dollar rolled over again. But now we're back to that level, and the dollar's catching a bid. And guess what? Stocks don't care. Stocks continue higher. So I was talking to a friend of ours, Mark Dow. Shout out Mark Dow, a good follow on Twitter. Really smart guy. Hung out with him IRL multiple times. And for me, saw how I did that Crypto Fridays IRL. See, I'm slipping that in. That's how the kids talk these days. Strazza, you don't know. So what his theory is that the correlations are changing. You know how I say, is the bond market going to catch up to tech? Is tech going to catch down to the bond market, or the correlations changing? Mark and I were having an interesting discussion yesterday, how, he thinks the correlations are changing there with interest rates and the dollar, right? So that's an interesting thesis. And this week could potentially be the start of that, of that deteriorating relationship. Right. Yeah. And then remember that as bull markets progress and uptrends get stronger, correlations tend to continue to come down. When moments of volatility, when volatility spikes, you get that correlation goes to 1 and everything's moving together as the bull market progresses, which we're 11 months into this bull market in my not so humble opinion. The correlations could be changing, and that would be perfectly normal. Last chart. Spencer, throw the euro and emerging market currencies there on the CEW. This is what I'm seeing. Are we getting the breakdowns in the euro and emerging market currencies? Is this a consolidation within an ongoing uptrend? Since last September and October, when these currencies bottomed out and have really been a tremendous tailwind for equities. One thing I'll point out is that, with the strength in emerging market currencies, really haven't seen that strength in emerging market stocks. It's mostly been the developed market stocks that are working out well. So, to me, this is front and center. The divergences between tech and Bitcoin, the divergences between the stocks and the dollar strength that we've seen. Those are a few things that are front and center. So when you talk about the state of the markets, this is what it looks like to me. You didn't even play that jingle, the state of the markets jingle there, Spencer. What the heck?
Well, I was going to, but I just played the Crypto Friday jingle, and I don't want to do jingle over jingle over jingle. So you know what I mean. But
no, we like the jingle. All the jingles. We want all the jingles.
You like the jingles. I like the jingle.
All the jingles. All right. Well, I have a jingle right here.
We gotta talk about this. JC can't just come out here and talk about the dollar's correlation.
What is this? This is it needs to be more like WWF. Like I need like an intro song, like right. Stone Cold coming in. Right. That's got to be like me, right?
Well, it is time for our next segment. We it is Friday morning. Typically, we get a couple of earnings reports later in the week. This morning, we got a couple good ones here. So let's do some earnings here. Talk our earnings spotlight segment right about now.
We're not done with this.
Strazza, what was that?
So we're not done with this dollar conversation. We're going back to it.
We're never going to be done with this dollar conversation, for the record.
Okay, here's a calendar for the week. As you can see, a couple stragglers. We got this morning. I want to focus on 3. I want to focus on Applied Materials from last night. I want to focus on John Deere, and I want to focus on Foot Locker. Let's start with AMAT. It was a good report. Their earnings per share came in above estimates, $2 versus a $1.84 estimate. Sales of $6.63 versus $6.38 billion. So they beat on the top line and the bottom line, and they gave some EPS guidance for the current quarter that was in line with estimates. Looks good to me.
That's who? Deere?
AMAT.
No, AMAT.
AMAT. Dude, throw up that AMAT chart if you don't have it up there. Yeah.
Up?
Yeah. Sorry. I'm not looking. These stocks look so good. The past few days, I was looking through my list of semiconductor stocks after the close yesterday. A lot of this. And a lot are heading back to new all-time highs. So super bullish. They all keep beating earnings, it seems like, too. It's just like one after the next. And you love to see this group work. That's what I have to say about that.
I mean, you love to see this group work if you're long technology and you're long tech stocks and you're long stocks in general. You want to see this group work. If you're a perma bear, seeing this is like, twisting the knife right in your stomach. I mean, this is the worst possible thing you want to see if you are shorting equities during a bull market. Like, these are things you see in bull markets. So
all those bearish economists too, they don't want to see semiconductors start ripping. So
what are they so angry about? Maybe they're so angry because they're economists. I'd be angry if I was an economist too.
Let's talk about Deere, and then I got to know why Foot Locker's down 25% right now.
John Deere just dropped. I mean, they just dropped an incredible quarter on us here this morning. Their earnings per share, the unadjusted number was like $16, but the adjusted earnings per share was $9.65, which still beat the estimate by a whole dollar. Sales beat by $3 billion. They reported $17 billion in sales versus an estimate that was in the $14 billion range. They raised their net income guidance for the year. They raised their dividend from $1.20 to $1.25. It was just a great report for John Deere.
I love it. It seems like they're always beating earnings, dropping some hot reports. I'm looking at their revenue trend right now. I mean, this company's just got it going on. Just steady growth for such a long time now. You guys are really consistent too. I love to see the dividend hike. Chart looks good, but industrials kind of got to get it together here. There is some damage to repair on some of these charts. Deere's been falling since November now.
Yeah, no doubt. Listen, if industrials are going to come back, like we discussed earlier this week, now would be the time, I think, to see some rotation. If this is in fact a bull market, if this is in fact the strong uptrend that price continues to suggest it is, seeing some rotation into some of these cyclicals, I think it's front and center. But John Deere still in this longer term range, still working itself out, has come down since the fourth quarter, but within the context of a bigger range. So let's see if this thing could start to recover with industrials. Pretty high correlation there with the overall sector. But let's talk about this disaster in Foot Locker.
Oh, this is a disaster of the day. I guess no one's buying shoes. Foot Locker adjusted earnings per share 70 cents versus an 81-cent estimate. Sales 1.93 versus $1.99 billion. But that's not where it's bad. Here's where it's bad. Total sales down 11.5% year over year. Same store sales, which is just a measure of sales at locations that have been open for more than a year. Same store sales down 9% year over year. Then forward looking, they lowered their guidance, their sales guidance for the year. They lowered their gross margin guidance and they lowered their EPS guidance by a lot. Frankly, they lowered their EPS guidance by like a whole dollar, from like the mid $3 to the low $2 for EPS for the year. So just nothing redeemable about this one.
Yeah. So this is a problem report because it's not that no one's buying shoes. Lots of people are buying shoes, right?
I'm buying shoes constantly.
Yeah. I think people are buying.
My wife yells at me because I buy too many shoes.
Yeah. Look at Deckers. Look at Skechers. Look at On. Plenty of these shoe companies are making new highs, trending really well. I think nobody's buying shoes in stores, in malls like Foot Locker is the big problem. People are buying directly from manufacturers. When I buy my shoes, I buy them right on Nike's website. So I don't know. Maybe it's just.
Dude, I just go to StockX. If I have a good day in the market, I'm buying new Jordans. I go to StockX. I know that I'm paying a premium. I know that I'm probably paying an extra 10, 20, 30 bucks, maybe more by using StockX, but it's reliable. I know what I'm getting. I've been using them for years now. I've been using StockX for at least 5 years. And I've had nothing but great experiences. And it's one of those things, getting back to Lindzen yesterday, I encourage you guys to listen to the conversation we had with Howard Lindzen on yesterday's show, where he's talking about, the wealthy, the higher premium stuff. I think StockX fits within that. You're paying a higher premium for a better experience. I'm happy to do it. I know that I'm being overcharged, but it's such a pleasant experience. I'm happy to do it. I do it all the time.
Alex in the chat is buying directly from On. Look, if you are a shoe or footwear company this morning, you're catching strays. Okay. Strazza mentioned Nike. They're down this morning because of this report. Under Armour, they're down this morning because of this report. Foot Locker is dragging the entire sector down with it today. So
can we talk about why the people that work at Foot Locker dress like referees? Like that's just stupid.
That's their thing, man.
That's dumb.
That's their thing.
You don't want to see that from
I haven't been to a mall in so many years. Do they still do that? Is that still the thing?
Yeah.
I wouldn't know, honestly.
I was at a location long ago. It's a concern because there's so many other retailers and similar businesses that are beating earnings, breaking out to new highs. Don't like this at all.
So, but okay, hold on. So you don't like this at all. So you think that this is a bellwether? You think that this is information from the better sector?
No.
Or no?
With Foot Locker?
Yeah.
No.
I don't think so either. So who gives a
Not
shit?
at all.
Kind of like these little banks that don't matter, that keep disappearing. Nobody cares. Same thing.
I'm saying it's a concern for them. Like there are
yeah.
other similar businesses that are doing just fine. Like they're doing something wrong. I don't like to see that.
No doubt. Yeah.
9% sales miss? That's terrible.
Yeah.
No, 11% sales miss, 9% in just the stores that have been open for a year. So
Sales 9.
bad, however you slice it, pretty much. But I think the sentiment seems to be correct. Buying directly from the retailer and not going into the mall. Okay, what time is it? It's 8:53. We're gonna have Brian Lund on in a couple minutes here. Before we do that, let's go over to our What's Moving segment.
Movers and shakers.
I want to bring up the Palantir chart. You guys see that yesterday?
Yeah. So you're telling me there's no news here. This is just Wall Street bets doing fun things.
Oh, no, I didn't say there was no news. The news seems to have been that 2 days ago now? A day or two ago? ARK Invest, Kathy Wood bought a lot more Palantir. I don't know if she has the influence that she used to have maybe a year and a half ago or so, but that seems to be the only headline that I've seen.
I don't know what you mean by influence, but I think their AUM is just fine.
She back in the day, you know how they disclose their ads and deletes every single day. She had the power to move stocks, but just by that. But haven't seen her do that for a while. In any case, though, we know this is a stock that Wall Street Bets loves. Lots of people love the stock, and so they bought more a couple of days ago, and look at the breakout, JC.
I mean, listen, to me, it's less about, who bought what or who said what or whatever news, and more about the fact that this chart, this pattern continues to come up again, particularly from growth stocks, technology, software, internet. We keep seeing these big bases. And Spencer, I don't know how they teach you in New Jersey, but the way I learned it is that we want to be buying the smiley faces and we want to be selling the frowny faces. And this little smiley face, it keeps smiling right back at me. I keep seeing again and again and again. And you want to know something? The resolutions continue to be higher, not lower. So in other words, these consolidations that we've seen since 2022, and a lot of these smiley faces, if you will, are just that. They're not consolidations within ongoing downtrends, which would be characteristic of a bear market. And this is not that. These are bearish to bullish reversals that are resolving higher.
Yeah, I like the thing with this one is it got so ahead of itself, right? So overdone after the IPO. But you're right. It's sometimes all it takes is time, right? And you can see it clearly getting. What is that?
This is the definition of accumulation, right? This is what we're talking about. It's not like, oh, JC's buying smiley faces like an idiot. No, it's not about the smiley face. It just so happens that the way accumulation looks like, and I've been doing this a long time. I've looked at a lot of examples of accumulation. It just looks like a smiley face, right? But what this is institutional accumulation that takes time versus institutional distribution, which takes time. That looks like a frowny face, right?
Yep.
You already know how I feel about this one.
Strazza loves Palantir.
Lots of people love this stock. No one knows what they do, but
government contracts, right?
You
Whatever that means.
I don't know.
You a special place in my heart. I used to do the accounting for these guys.
All right. A couple more. We figured because it was Crypto Friday, we would pull up a chart of Bitcoin here. So we do have that. And I think we have Bitcoin and Ethereum. Is that right? Yes, we do. So anyway, Bitcoin, guys, thoughts? Ethereum.
Yeah, the lack of earnings, to me really stand out here. Look at go to the other one, this one. Okay, perfect. Yeah, to me, just bigger picture. Look at the former cycles highs. Late 2017, early 2018. Those, that's when your drunk uncle was asking you in Thanksgiving how to buy Bitcoin. Remember that? Like for you youngsters who weren't around back then, man, there were some wild times. Like family, my friends, like I have contrarian indicator friends from high school. When they're texting me about something, like take the other side immediately, right? And I was getting text messages late at night, so they were definitely under the influence. And I'm getting, JC, which cryptos should I be buying? This is late December. I remember being in my sister's apartment in New York City, getting this text message and laughing or crying because it was a heads up that it was over. And it wasn't, JC, should I or should I not invest in cryptocurrencies? It was specifically which ones should I be buying? So anyway, so we obviously came down from there, and then we broke out, made new all-time highs after COVID, as you can see here. And then over the last, year or so have really been retesting those former highs, that former resistance turning into support, classic polarity. That's how markets work. I think from a longer-term investor's perspective, I think you have to be long if we're above the prior cycle's highs. And then from a trader's more tactical perspective, if Bitcoin can get above 30, 31, hold those levels, I think you're adding to positions from a tactical perspective. But zooming out, there's a great chart, longer term, got to be long if you're above the prior cycle's highs. That's it.
Yep.
All right. I think that's a good place to wrap up the conversation. It's time for our guest anyway. Brian Lund is joining us today. He is from the amazing One Loop newsletter, and I think we have him here backstage. He's lurking, so let's get him on the show right now.
There he is.
Hey,
look at these graphics and a drum click, and I mean, this is pretty professional, guys.
Not bad for a couple of yahoos, huh?
Yeah. I watched your show the other day. Spencer just keeps this thing moving, man. Like I'm worried I won't have enough time to say anything here.
Dude, somebody has to. If it wasn't for Spencer, Strazza and I would just keep going on and on and on forever,
Yeah, we tell him it's his job to shut us up and keep us moving. So.
Yeah.
By the way, what's up with Linzon's camera? It looked like a Sports Illustrated camera. Like you would subscribe to Sports Illustrated back in the day. They send you a phone, right? I think that was the type of camera he had.
I think he's just messing with all of us. He does it on purpose.
I think you're
Lindson's easy to rip on. He's like this tech investor entrepreneur who's like sucks at tech. You know?
It's too easy. It's like a softball. It's like Linson softball. Yeah,
it is. All right, BC. Forget Linson.
Do we have more with Brian today than Linson? Because these interviews, they're just too short.
Listen, Brian, I'm not even going to ask you a question. I want you to tell us, like, what's on your mind? What are you seeing out there? First thing that comes to mind. What are you paying attention to this morning, this week?
Oh boy, there's so many things. Well, first of all, more constructive charts. I just caught the last bit of your segment, and I know Palantir was one of the ones I sent over, but I'm seeing more and more charts that if you look at them, you go, okay, there's a reasonable bottom, there's a rally off the bottom, there's a pullback and consolidation, there's a sideways movement, and now they're starting to move up again. So that's number one. But I tell you, I am on a quest. I know it's probably a horrific quest, but I'm on a quest to tell people not to listen to stories and narratives anymore. Like it's so frustrating. Even the beginning of this last week, I heard people saying, how will we get out of this range? Like, I don't understand how we're going to get. And what they meant was, what's the story? What's the catalyst? And I was telling people in the Lund Loop and the Discord, on random people on the street, I was just saying, look, you don't know whatever is going to get us out of this range. You have no idea what it is. It's going to be something we're not even thinking about, or it will be nothing. And sure enough, just out of the blue, we went out of this range. And it hurts my soul because there's so many people that get fixed in what they think has to happen or is going to happen, that they're not paying attention to what is happening. I think back in October, how many people thought we're falling off a cliff? That's the end of it. When housing stocks started to get strong, they're like, there's no way housing stocks will ever rally because we have interest rates or whatever. There's no way big tech will. And they missed out on 6 months. And I know, JC, in your mind, you're going, screw them, right? You're like, who cares, right? But
I don't care. I'm happy. I'm happy they're getting crushed.
Yeah.
I mean,
yeah, I know you
short. Their short exposure coming into the year, it was part of the catalyst for this unwind. So thank you, angry shorts.
I get it, but I'm like that school teacher that changed your life. If I can reach one person, that's all, right? I just want one person to not.
Nobody's listening, Brian. You think these psychopaths care what you think? No one's listening, man.
Where's your empathy, JC?
So Brian, it's a valiant effort. We appreciate you.
Nobody cares. I love you for it, Brian. I love you for it. No one's gonna listen to you, dude.
Are you saying that the market wasn't screaming the past 2 days because of hopes about a debt ceiling negotiation?
I know.
Said.
I think what frustrates me so much is people feel like they have to understand or divine what the story is for them to believe in the price action, right? And look, I'm an optimist in life, but I'm also a cynic. And there's been too many things where I said that won't work and I missed out. Like, I'll give you a great example. Back in the 90s, when I was a kid, there were these things called wacky stickers, right? They were like kind of like trading cards, and I loved them and forgot about them for years. Then in the early 90s, internet started to bubble up, and I'm like, hey, maybe I can find these things again. So I got on the internet, I found a site. People were actually trading these and other things, and they were, they'd say, hey, I've got some. And I go, cool, send them to me and I'll pay you. And I called my friend. I said, how stupid are these people, right? Someone somewhere in the world is going to send something to somebody else, and they're counting on them to pay them. What a rube. They're so stupid. Turns out that was eBay, right? But I couldn't see that, right? I couldn't see how that would work, and how are you going to transfer the money? How can you how can you make sure this works? I should have just been saying, look at the price, right? But my story prevented me from buying into the price action. And that's all I want people to do, is just say, forget about the story. Try to be, I know it's cliche, but be that Bruce Lee thing, right? Be like water, just flow whichever way it goes. So,
yep.
Yeah, so, and remember, listen, not to get all philosophical, but it goes back to evolution. Humans need to be told stories. Humans, that's how one of the reasons we're here, is because we tell each other stories. We have a natural desire to be told stories and to tell people stories. It's perfectly natural. If you didn't have those feelings, that would be incredibly inhumane. But it's up to us as investors to overcome those evolutionary desires and biases and not let that affect our decision making in our portfolio. Right? It's more about understanding, and once you realize, oh my God, I'm a grown adult. I don't need to be told bedtime stories to go to sleep. I could just follow price and have a plan. And once you realize that, and most investors never get to that point, fortunately.
Yeah, it's also about understanding our human nature, right? The human nature we have outside of the market clashes with the way you have to think about the market. And I always go back to when you're a kid, you go to you go to Sears with your parents, and they're going to buy a refrigerator. They want the lowest price, right? When you get a car, you want the lowest price because you're buying a depreciating asset. We bring that attitude into the market. We don't even know we're doing it, right? So when a stock is going down, like when you've got a NVTA, Kathy Wood pick that went from $60 to $1, people think, oh, I'm getting a better deal as it's going down, when really the stock's just in a race to zero. But we don't know that. So we've got these two different mindsets, one that works perfectly well outside the market, one that leads you to ruin in the market. And we have to be able to identify that and understand what we're doing there.
BC Lund, I don't know if you got the memo, but it is Crypto Fridays here on the morning show. And I know that you are not just a crypto guy. I mean, you're kind of whatever's moving guy, and I appreciate that from you. But let's move over to crypto, and what's on your mind? What are you seeing there?
Well, so look, it's well documented. I believe 99.9% of all crypto coins are going to zero.
Didn't they already? Didn't that already happen?
It feels like, look, I know that the technology is going to be here, and I'm sure that like Bitcoin, Ethereum, a couple others, maybe, well, I won't say it, are going to stay. But like, I think it's all a joke. We're going to look back in this period and go, what were we doing? I personally believe that when crypto either goes down or sideways and the market goes up, like when it's no longer, and I feel like it's more like that. You guys would know if it's still correlated. I feel that's a good sign, because crypto to me is a sign of that froth that we had in 2020, 2021. So I think it's healthier for the market to diverge like that. Having said that, Bitcoin, I think I sent a chart over. It looks like it might have just a short-term head and shoulders top. I know every technician sees a head and shoulders in every chart they look at, but it feels like there's a little bit of a short-term.
Throw up chart 18. Yeah. Is it going to complete though? Are we going to see any downside, from here?
I don't know, but you look at that. Look at the left-hand side there. I mean, look at that big, that straight run. Like, there's not a lot of support in that area. So I think if it does break down, there's a good chance you get down to those March lows. I'm not saying that Bitcoin's going to crash. I'm just saying short term, it looks a little toppy.
JC hates this short-term top narrative. He's not buying it.
All right, go ahead. Tell me the counter argument.
Well, Steve is specifically talking about, some of the more value cyclical oriented areas like industrials and some of these metals and miners where you're seeing these distribution patterns, quote unquote distribution patterns. But these head and shoulders tops, these reversals by definition need something to reverse. And in a lot of these cyclical areas, you just haven't seen this uptrend, this massive rally to reverse. Like, there's nothing to reverse. In a lot of these cases, they look like consolidations after that initial thrust off the lows. So if we stick with that theme in the cyclicals and move that over to Bitcoin, which makes no sense whatsoever at all, by the way, we're talking about two completely different groups. In the case of Bitcoin, I don't think you're wrong. Bitcoin's a unique animal here because that 31,000 level is a ton of overhead supply. So to see distribution here and perhaps another test of that 20,000, if you're right, and this is distributive in nature, and we do break 20,000 is next, I don't think that's the end of the world. Like Brian said, that's not a crash. That's just a pretty normal correction. A 50, what would that be? That would be a 30-something% correction in Bitcoin. Like, that's nothing. We'll get one of those over the weekend. You know what I'm saying? Not a big deal at all. I'm not making that bet. I think that we continue to churn up here for some time. I think ultimately we do break out above 30, 31 without having to retest that 20. If we do get down there to 20, I'm a buyer. That's where I was a buyer before. So I'll be a buyer again in that environment. But I got to tell you, I'd rather be a buyer above 31.
I'd rather be a buyer at 25. I wouldn't mind seeing a nice little retest of this base breakout from earlier in the year.
Yeah, I'll tell you something though that you said in that statement was so important. The context of that pattern, right, where it is, and I see this all the time. Like I'm not a CMT, I'm not as expert at charts and technicals as you guys are, but I see people all the time. Oh look, here's a reversal bar, but it's like in the middle of a base, and I'm like, that's not a reversal bar, right? So understanding that context of the pattern and what happened before it is so key.
Right, Brian Shannon always says that. Shout out Brian, came on the show on Wednesday. Look where it's come from, right? When you're looking at these patterns, when you're looking at the market behavior, putting into context with where it's been over the last months, 3 months, 6 months, year, like what's transpired. So if you're looking for a reversal pattern, ask yourself, is there something even to reverse here?
Yeah. So let me ask you a question on that, because, I've been going through Brian's book and I love it. Right. But I don't see you guys use VWAP that much. Like how do you weigh in on VWAP, or do you use it, or?
Yeah, we use it. Yeah, for sure. Yeah, 100%. We've been anchoring the S&P 500 and the NASDAQ for that matter to those all-time highs a year and a half ago. That has been a good anchor for sure. Yeah, we use it. Yeah, we like it.
I got all the guys into it. We're all using it. VWAPs are on every single one of my charts. Like I'll use TC2000 and other software during the day, but when I'm publishing, I'm using Optima, and I'm only putting on whatever indicator I'm specifically talking about, like in a tweet. So I'll strip everything else off. But
Steve, you're already upsetting me because you're saying VWAP, right? So
yeah, I disagree with Brian. The VWAP. I can't.
Do you say GIF too, or GIF?
Well, remember, Brian. Brian Shannon is from Massachusetts, so everything's like VWAP, WAP, He's from Massachusetts. He hasn't always lived in Colorado, so he still has that New England twang in him.
Got it. So it's a catsup thing. I got it.
Yeah.
All right. What's your favorite chart out here? I mean, is it DraftKings? Is it Palantir?
Is it a pot stock?
Yeah. Don't even get me started on pot stocks. I
like getting you started on pot stocks because it's funny.
Man, it's cruel at this point. Like, it was fun for a while, but it's like that Simpson thing where like he's dead already. Like that's I feel about pot stocks. I like the Shopify chart. I think that's kind of interesting. And that, speaking of which, that's something that Brian put up, I think either earlier this week or last week, about how it had broken above the, I think it was the VWAP from the first of the year, or maybe it was the all-time high. I can't remember, but you can really see a change in character in the chart. And, but I think it's important to, just because, like, this is our thing I tell people, just because it's done this work doesn't mean you can just blindly buy it, right? You still have to be strategic, and it's pulling back right now in a really tight channel, which I like. So,
and they keep beating earnings. This one resolved higher from base a long time ago. This is one of my one of the better names that I bought last year. Jumped the gun on this one. But no, Shopify looks great, high and tight now, following another earnings beat.
You know what's interesting about Shopify is that, you're kind of getting a lot of things that are working here. Shopify, we know it's software, right? We know it's technology, but you can argue that it's like consumer discretionary, right? Retail, and we're seeing a ton of strength in consumer discretionary. In fact, on an equally weighted basis, it's the best performing sector off of last summer's lows. So even though Shopify isn't technically consumer discretionary, it does have an element to that. I would think, no?
yeah, and what's interesting about Shopify, and I've been talking about this in the last week or so, is so I had Shopify with 3 other stocks that I called the at-home stocks during the pandemic. So it was like Zoom, Palantir, Shopify, and I think DocuSign, right? And of course, they all have been beat to hell over the last year and a half. But you're seeing some of them now look better, while the other one's still like hot death. Like Peloton looks horrible. So what I'm trying to tell people is, just because we see the market lifting doesn't mean you can blindly go in and just buy whatever stocks, right? You're seeing this bifurcation and this separation between stocks that may come back someday and stocks that may be dead forever.
By the way, this is another great example. We keep seeing it again and again. That same pattern, that same smiley face, throughout 2022 and into 2023, resolving higher. Like this theme, particularly in tech and growth, and in this case, software, and you're seeing it in it. Just, you keep seeing that again and again. So when people are talking about like weakening market breadth, deteriorating market breadth, those people are just, they're not doing the work. Because if you're doing the work and you're going through every single chart, instead of waiting for your stupid computer to tell you that stocks are going up, and you just go one by one, you're going to see this. You're literally seeing breadth improvement since last summer. So the fact that people are still saying that breadth is deteriorating, they're just not doing anything. They're just pulling up some random, advanced decline line or percentage of stocks above whatever random moving average. Like, that's what they're doing. And they're assuming that that means breadth deterioration because they're too lazy to actually do the work. Do the fucking work, or find somebody who does and read their notes.
Yeah, or I would argue that they're in denial, because, like we talked about earlier, they've got a narrative. They've already. Spencer's coming to kick me out. That where they think
fun police is here. Fun police.
Right? I feel like that hook thing, right? They have in vaudeville, where they know what's going to happen in their mind, and they're just saying, price is moving, but wait for the rug pull, right? It's coming any moment, right? That's the mentality.
A lot of that on Twitter. Just wait. Oh God. Stop.
All right.
Before he runs, one question. Spencer, one more question. Brian Lund, right now, gun to your head. You have to buy one pot stock. You can hold it as long as you want. One pot stock. What is it? Go.
I think it has to be Tilray, I think. I just,
is that like the blue chip? Is that the blue chip of pot?
That's oxymoron, JC.
Yeah, there's some guy out there who we all know that was a pot bull that says, "Oh, these are the pot FANG stocks," right? So it was a FANG of pot, and whatever.
Did you see Brian Shannon stopped in the chat to say hi? He was listening to everything we were saying.
Yeah, I saw it.
Yeah, we were giving him love. We were giving him his flowers.
I threw the link to Brian's Twitter and Brian's site in the description. Check it out. Brian Lund, the Lund Loop. Brian, thanks a lot for stopping by.
Yeah, thanks bro. Guys. Appreciate it.
Adios.
All right. Every morning we invite Kimmy Sokoloff on the show to walk us through her watch list for the day. Let's see what she's watching right now. Kimmy's here. Kimmy, what's up?
What's up, guys?
What are we doing?
Happy Friday.
Happy Friday. All right. So, are we buying this morning strength, or are we fading it?
not so, there's names I'm looking to buy. So whether we'll see with the indices, I'm not sure. I think Powell's speaking today. I'm not sure what time. Do you guys know what time? I missed that part. I'm looking at ExxonMobil. I put in my morning note. It is gapping up from where I wrote it. I was watching it yesterday, and I'm watching it through the 200-day, which it's gapping up above that, like 106.10. So I'm seeing if it could manage to hold that level for a potential move up to like 107.40 to 108. Let's see. Listen, obviously oil stocks have been out of favor. Maybe this name gets a little bit, oh, thank you, 11 a.m.
Hey,
So
come on. Who's better than you, Nikki?
Thank you, Nikki. So, maybe it gets a move on today. I'm also watching Cat, John Deere, they reported this morning. So we will see how Cat does above 218. So I'm going to be watching that.
We are irresponsibly long Caterpillar over here, thanks to my obnoxiousness. Nobody liked it. I was the only one who liked the trade. Strazza's like,
You better hope it works. Kimmy, what is your process around earnings? You don't care if somebody just dropped an earnings report this morning and the conference call is on, you'll trade it?
No, I try to avoid earnings
Okay.
the day of it. Like if it reported the night before, then
Okay.
it's a little bit different. But the day of, and I know, so I might not go for that name. That's why I'm looking at Caterpillar. But
Right.
I'm not sure. I'm looking to see if they had the conference call. Earnings conference call is 9 a.m. Central, so it'll be 10. Right. So you have till 10 o'clock in that name. It might have a move. John Deere, Deere and Company might have a move. It's indicating at 383. Maybe we get a move up to 386. Maybe if all goes well, up to 394.
And
do you still call it, Kimmy, do you still call it Citicorp? Citicorp? Or do you still call it Citicorp?
I do. Shut up.
Do you? You're old school and they're calling them Citicorp and John Deere. Like when we use like the old names, that's how you know you're OG.
Myself because I said John Deere and I'm like, oh wait, it's not.
It's okay. I appreciate it, and others do too. By the way, I like I'm never gonna call that shit Meta. I'm never gonna call it. I'm never gonna call it Alphabet. Like I'm never gonna call it Alphabet.
I mean, everyone calls it. Was it Magna? I still call it Fang. Fang stocks.
What are you shorting? What are you selling here? Anything?
Let's see. Well, I'm hoping, let's see if these spies, get a push. I've been looking for this 421.20, and I have been long in my longer term account, the SSOs for a while. So, we have two gaps above at 421.20. We also have a gap up at 425, XLK, listen, these tech stocks are going a little crazy. I think potentially XLK is moving higher, maybe one little push, but I think has potential move back down to like 155 or so. Need a breather. They're getting extended. XLK, the tech ETF.
I like it, Kimmy.
All right, Kimmy Sokoloff runs an exclusive trading room where she live trades the open, which is in 10 minutes every single day. If you want to join her room, email us. It's on the screen right now. Questions at stockmarketmedia.com. Email us, and then we'll talk about getting you in the room. Kimmy Sokoloff joins us every day to go through her watch list. Kimmy, we'll let you go. I know you got to hop.
Have a great day.
See ya.
Bye.
All right. Okay, it's 9:20. As I said, we got about 10 minutes till the open. Let's take a quick look at the hot corner right now. I know we had some stuff going on there, and hot corner we're watching the biggest insider buys, and let's go.
Hot corner. So hot right now.
What is
like it?
That? Yeah.
Is that the best bumper we got?
Easily. It's not even close. Crypto was cool. I liked crypto. Hey, here's your orange, JC. So Occidental Petroleum back on our list today. We talked about it just on Wednesday. So Berkshire was out here. They filed. That was purchases from 5/15. So May 15th, now back out here buying more stock May 18th. 200 million this time. I think it was about 125 earlier in the week. So, look, stock's still hanging around in the Buffett zone if we go to chart 30 here. So maybe they just keep buying, keep supporting it. Yeah, there we go. So for us, our our risk level is and has been 57.50. It's really, the breakdown level of this potential topping pattern. I think, it makes a lot of sense here if you still want to be long energy to build a position at the same price that Warren Buffett is building his position at, right? And we talked about it Wednesday, so I won't go on and on, but at just about 30 some odd percent right now, they could go all the way to 50. There's a lot of, fuel left in the tank or more buying power that Berkshire has. So Oxy against 57, 50, 60. I like it. Some other things that stood out on the list just real quick. We had a lot of CEO activity, right? So that always stands out. Luminar Technologies, president and CEO bought about 4.8 million. Ritchie Bros, auctioneers, CEO, about 1 million. And then Agree Realty Corporation, CEO and COO were Form 4 filers. That's what I got for today.
Two things. One, it's Agri. I know that because I've interviewed the guy before. And Alfonso asked me to mention Coinbase because it is Crypto Friday. And
I threw the chart up there. It's chart 2 there on the deck.
So you guys are making me talk about Coinbase for Crypto Friday. Seems appropriate. Huge insider buy from the co-founder of Coinbase, Fred Ehrsam. You're hearing a lot on Twitter and in the news. Everybody hates this stock. You're hearing a lot about how Brian Armstrong is selling shares, but nobody seems to be reporting about how the other founder is out here buying shares on the open market, and he's buying a ton at a time, 50 million. We had another big Form 4 filing from him last year, so this is not the first time we're seeing this. But look, in terms of Coinbase, from a trading perspective, this base needs to complete and start looking more like Palantir and the others, right, before we get too excited.
But getting back to what I was saying before, another good example of this smiley face, this, bottoming pattern that we've seen since 2022. Palantir, Shopify, many of these others are resolving these higher. Yep. So knowing that, are you going to bet that this one is not going to resolve higher? Are you betting that this one's going to resolve lower? No. To me, look at its brothers and sisters and cousins. What are they doing?
And that I wanted to say that to Brian. He was saying, people are saying, how are we going to get out of this range? You know how you get out of this range? More and more stocks get out of their ranges and resolve higher. And we continue to see it. And you know what's been the big catalyst for that under the surface the past few weeks? Earnings season. Wall Street likes a lot of these earnings reports, and you're getting a lot of breakouts from these bases on the heels of them. So.
This Netflix yesterday, man, just huge move coming out of communications. So you're seeing these growth stocks, things like, software and communications. And I mean, just one after the other. And then you get some shit like Foot Locker falling apart or some random bank that no one's ever heard of. Like, those are the ones that are going down. Like, who cares? Let them go to zero. They deserve it. Let's follow the ones going higher, the ones that matter.
Listen to the message of the market. You want to be in the winners. You want to be in big tech. You want to be in the ones that are completing bases. I mean, look at the way Google resolved higher from that base. Do we have a Google chart handy? Resolved higher from that base. And look at the follow through we got. It's like target hit in 5-10 days. I think it's hitting our target this morning. So for a lot of these stocks too that have resolved higher from bases, JC, target ones have already been hit. Now it's the secondary targets. And for a lot of these issues, that's the all-time highs.
Yeah, no doubt. And our call options in the Google don't expire until October, or they did December's. I got to check the sheet, but either October or December's. Either way, we got a long way to go. Already took half off the table, so it's a can't lose trade. I like that position.
All right, find out where the big money is moving with the Hot Corner. It tracks all the biggest trades from hedge fund titans to DC politicians to activist investors, delivered to your inbox every single day for free. Just scan the QR code on the screen or click on the link in the description of this video. I was supposed to put the link up on the screen, but I forgot. So link in description, QR code on screen. There it is. Check it out. Get the Hot Corner every single day right in your email. Okay, it is 9:26. We did not talk about the chart report yet. So let's do the chart report because I've got a thing I want to highlight here from that. So where's my chart report bumper? All right, this is yesterday's edition of the chart report. I thought two things. One, the chart of the day from Frank Capillari, who I believe will be on our show next week. Not sure the day. Thought that I thought we were going to talk about carry with Brian. We didn't, but we've talked about this before ad nauseum every single day, but I thought this chart was very interesting. It just, you know, you have to squint sort of to see that up move there. But anyway, I thought that was interesting. And this other one, JC, that I wanted to highlight for you. Where was it? It was, oh yeah, the 23-year base in tech. Thought that was interesting.
The 23-year base in technology on a relative basis.
Relative. Yeah, sorry.
Relative basis. And then, just keep in mind that, it's a 23-year high on a relative basis, but we're not at that high from 23 years ago. In fact, we're nowhere near it. So there's people who are like, this is not sustainable. We have the data. Not only is it sustainable, the higher probability outcome is that it's going to continue to be that. So you can fight the trend if you want, but clearly the market can stay solvent longer than you can stay irrational.
Yeah, there's a long way to go, right? Back to those .com bubble highs if you're looking at a XLK SPY chart.
Yep, nowhere near that. And then also, we're making new one-year highs in the NASDAQ. We're seeing a lot of the stats. You're seeing that from Nautilus, just pointing to the fact that registered its first 52-week high in over a year. Historically, when we see that, these are definitely positive returns. I think I saw a stat from Ryan Dietrich today. The last it's happened 14 times that the S&P 500. Here, I'll read the exact. I think it was the NASDAQ 100. It's happened 14 times. Let's see. The exact stat is as follows. Shout out Ryan Dietrich, by the way, good friend of ours, friend of the show. He'll definitely be on here for a while. But the NASDAQ made new 52-week highs for the first time in nearly 18 months yesterday. And 14 out of 14 times throughout history, it's been higher a year later. And when you're looking out 1 month, 3 months, 6 months later, the stats are off the charts. It's not perfect like it is 1 year later, but it's got a heck of a hit rate. You know why? Because asset prices are not random. Asset prices trend. We know that. And this is a way to define a trend. A simple way to define a trend is that it's making a new high for the first time in over a year, right? It's defining a trend. So there's a higher probability outcome. It's going to continue. We have the data. We have it.
All right, I was alerted to the fact that was the chart report from 2 days ago. So apologies, but this is the one from yesterday. The chart of the day was from Nautilus Research. So shout out to them. You can get the chart report delivered to your inbox every single day, also for free, just like the Hot Corner is. It compiles the best charts and trading wisdom from around the world of finance. So you can use the link in the description of this video on YouTube or scan the QR code on the screen to get the chart report delivered to your inbox today. And there's our opening bell.
They're off.
What timing? Wow.
We need a
All
bell.
right.
I want a bell noise. It's not enough noises.
You guys didn't hear that? Or that was just my computer? I heard the bell.
No, that's on all of our individual computers at the same time, but it can't be heard, I don't think, on the stream.
Got it. We should do that, though. We should do that. Ding, 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 ding.
We should do that. Okay. What did I have on my list next? Then we typically wait 5 or so minutes and do talk on the tape, but let's wait for a candle or two to shake out.
Why don't we talk about Strazza's bull market shirt? Joseph is mentioning where the party's at. Why don't you explain your bull market shirt?
Yeah, thanks, Joseph. Party's in Key West tonight, man. Yeah,
every night in Key West, by the way.
Going downtown tonight. No, this is my bull market shirt. I think I busted it out earlier this year. Maybe it was really late last year, I think, just to be obnoxiously clear about my opinion that stocks had bottomed late last year and that we were in a new markup phase. So I wear this shirt to remind everyone that we are in an environment where we want to be looking for stocks to buy and not sell.
Yeah, I've gone back and done the work, extensive research on the subject, and historically in bull markets, investors are rewarded for owning stocks. Shorts are penalized for selling stocks. I mean, again, I encourage you guys, go back, look at the data, study those bull markets. You'll see in all of those occasions, investors are rewarded for owning stocks.
JC too, we both feel the same way about this, but how miserable is it to be bearish? Not only to be, have like a bearish tilt, but to be bearish when you shouldn't be bearish and the market is clearly telling you that you're wrong. Like, That's just like, that's no fun. Like, I'm a positive person. I'm a happy person. Like, I'm bullish about the future. Like, I don't want to sit here and bet on stocks going lower. I've never been good at shorting because it just doesn't fit my personality. Like, I want stocks to go up. Everybody's in a better mood. The parties are better. Life is good.
Yeah, no, listen, I'm with you. Listen, there's a time and a place for everything. We've been short plenty. 2021, 2022, there were a lot of great shorting opportunities. These days they're not because we're just in a different market regime. But it's terrible to be perma anything. Being a perma bull is no good either, by the way. Being a perma bear is even worse. At least if you're a perma bull, at least you got more odds on your side. But again, there's a time and a place for everything. Gold sucked forever. Maybe one day it won't suck. Bitcoin sucks all the time. Sometimes it doesn't suck. There's, like I said, there's a time and a place for everything. And then, you see these perma bears and, to me, they fall in one of three categories. In some cases, they just have mental illness, like they just have problems, right? And you see that a lot. In some cases, they're just, that's part of their marketing strategy, just to be negative Nancy all the time so that they can shill whatever garbage products they're trying to sell, right? And then sometimes they're just not good at this, right? Rarely is it that one, but you do get people that just are not good at the market, at investing. But it's generally the first two. It's mental illness and, just marketing strategy, for sure, because people are vulnerable. That fear sells, right?
Scary guys. Yeah, the scary guys. Yep, for sure.
All right.
I do want to mention that Ian Culley, who is head of FICC at All Star Charts, will be joining us in about 7-ish minutes. So I know he has some charts, and I'm imagining he will talk about yields, but that's just a guess. But anyway, Ian Culley will be on at about 9:40.
I'm guessing gold.
We got some what?
I'm guessing gold from Ian.
Gold. Okay.
Yeah.
I'm guessing bonds. He's guessing gold. Okay.
I'm guessing both.
I told him it's Crypto Friday too, and to bring some Bitcoin along. So I can't wait.
All
right. In the meantime, quickly, just talking about the calendar today. It is Friday, so it's a light day. Obviously, there's no earnings after the close. The Jerome Powell, as whoever mentioned it in the chat, is speaking at 11 a.m. There's a couple other Fed speakers today, but that's obviously the big one.
Yeah.
Baker Hughes recount at 1 p.m. And that's pretty much it as far as economic and macro events for the day.
Baker Hughes still does those rig counts? I thought they gave up on that. They still doing that?
They still do it.
That's what Milton was talking about yesterday when he was talking about natural gas, and we were both just like,
can we talk about natural gas up 10% yesterday? Holy shit. What was that all about, huh?
No idea.
I'm going to be asking Ian Culley about that, Mr. Head of FICC. So FICC, fixed income, commodities, and currencies, everything outside of equities. People early in my career, Spencer, the way I learned it was that there were three asset classes: stocks, bonds, and commodities. And commodities did so terrible for so long that investors just decided that they were no longer an asset class, and it went back to just stocks and bonds, which is silly. So I think that we're in an environment, in a bigger picture environment, where it would behoove investors, including ourselves, to pay extra attention to the commodities market. I think there's going to continue to be opportunities there.
I asked Ian the other day. I guess I'll ask you guys now. So FICC, FICC, the FI is clearly fixed income. Which C is currencies and which C is commodities? Is it currency commodity or commodity currency?
It's a good question.
I think it's
commodities. Ian said it didn't matter.
I think it's commodities and currencies, but it doesn't. I mean, we do what we want around here, so it's going to be commodities are one, currencies are two.
All right. As far as any street moves, any analyst action today, the only analyst reading that caught my eye was an upgrade from Shake Shack to Shake Shack from Morgan Stanley to their version of neutral, equal weight. SHAK getting an upgrade from Morgan Stanley this morning to equal weight. That was pretty much the only one that caught my eye. We had a Disney downgrade from Macquarie, but they're a smaller firm. And that was it. So, okay.
Good burger, Shake Shack. I like the Shake Shack burger. I used to wait in line in Madison Square Park like 15 years ago or more. And I would sit there waiting in line. They used to have like a camera so you could go online and see how long the line was. Do they still do that? Is that still a thing?
That location is still very popular. Yes.
I used to have a friend that worked at the life insurance building across the street, and she could look out the window and would tell me, yeah.
I'm surprised here. Are you done talking about Walt Disney World?
I'm talking
Yeah.
about Shake Shack.
Yeah.
I wasn't paying attention. All right.
Yeah, we're done.
So
Delicious.
interesting that Nike is moving down in sympathy to Foot Locker. I think that's kind of ridiculous. I mean, Foot Locker is a brick and mortar retailer. Nike's Nike, so that's a little strange. And I also see some big energy upgrades, mostly from Mizuho. So EOG buy, Range Resource buy, and then Bloom Energy is another one, overweight at JP Morgan. So some love for energy. I mean, look, crude oil's repaired the damage. We'll save that conversation for Ian. And then one more headline that just caught my eye. So it seems like Samsung is no longer exploring some sort of a partnership with Microsoft to make Bing the default search engine on their products. So it looks like Microsoft's down on that news.
That could do it. Yeah.
Right. The AI wars. You know, a lot of smart people out here talking about these secular tailwinds from AI, like it's going to be some sort of new industrial revolution. What do you think, Vinci?
I mean,
buy everything forever.
You know me, I'm not one of these story people, narrative people for sure. Now taking a step back, Strazza and JC hanging out at the bar, just talking shit about the market. When we have these secular bull markets, when you have these massive run-ups in stocks, there tends to be that story, whether it's that's actually driving decision making, driving stocks higher, or if that's the narrative. And we'll find out later on. But, when you go cycle by cycle to the upside and to the downside, right? The Kathy Wood and all the ARK stuff was the poster child of that disaster in 2021, for example. Perhaps the poster child or the theme of this bull market is artificial intelligence. It could be. It absolutely could be. To me, it doesn't matter it doesn't really matter whether it is or whether it isn't. It could be, number one. Number two, I'm using artificial intelligence every single day. We have a Slack channel where we talk about how we're using it in different ways. Shout out Danny Jassy, has done a great job of showing us different tools, things of that nature that are helping us. So, I mean, I'm using it and I'm a moron when it comes to this stuff. So if I'm using it, think about what people who are actually good at this are doing with it.
ChatGPT has an app now.
Yeah. The Genius, right? That's the one.
I didn't download it yet.
What does that mean? Just a mobile app? Is that
Genius? It's called Genius. Where you guys been, man? Oh, sorry, not Genius. Genie. Sorry, Genie. Whatever.
I don't know. All right. You want to? Let's do FICC with Ian right now, and then we'll talk. We'll do talk on the tape after that. Ian, give me a thumbs up if you're good to go. Good to go. Okay. Let's run that bumper and bring Ian Culley on, head of FICC at All Star Charts.
Ooh,
morning, gentlemen.
Ian Culley in the house, making the debut on the morning show. I like it.
I like that bass line on that bumper.
Not bad, right? Right? You know what I'm saying? Yeah. Schaffer, did we get the approval on that bass line? Did we get the approval, Schaffer? Ian Culley, head of fixed income, commodities, and currencies, here on Crypto Fridays. Before we get into any discussions on crypto that you want to discuss, can we start with natural gas? Can we just go there? What the hell, man? Big move in natty gas, huh?
I don't know the story behind it. I don't know what drove that move, but I like it above 250. If the June contract's above the pivot lows from February and the pivot highs from April, I mean, I like it. I think we run back up towards 325.
I mean, that's a monster move. I know we didn't have it set up to discuss today, but I couldn't help myself. The natural gas, interesting sort of, you think that, could potentially be bottoming here. Fonz, you want to throw up a natural gas chart just to show that? But over the last, since February, we've been watching this natural gas chart for quite some time. You think this is it?
I think it needs more time. I mean, it had that nice failed move back in February, and it ripped higher, went all the way up almost to 350. and it's pulled back and made fresh lows in the past month, this month actually. So I think it still needs time, but I think we could get a short-term bounce here back up, like I said, up near 3.25.
All right. That's enough of natural gas. What do you got on your mind?
And how much will you weigh natural gas when you're thinking about the energy space more broadly? Like at all? Is it
Not much. Yeah, it's peripheral for me. I'm more focused on crude and then its distillates. Heating oil.
It's like wondering, if the strength in cocoa is good for tech stocks. Like, right? There's nothing there.
Yep, I agree. Ian, are energy stocks going to hold these former highs? We got some critical prior cycle highs here coming into play for XLE. Call it what, like 78, high 70s?
Yeah, the big story, we've been talking about it for months, is the bifurcation or the divergence between energy stocks and crude oil.
Yeah.
And crude oil, the bulls came in, they immediately repaired the damage in recent weeks, drove prices higher, but near term, crude oil is finding a significant amount of supply around that 74 handle. So I think, if and when crude can reclaim that level, I think it would do a lot for energy stocks. It's tough to say. It's tough to say. I got to give bulls.
What about the resiliency in those energy stocks despite a 45% correction in crude oil? Like, I continue to be impressed with the resiliency of those stocks, despite that correction. No,
absolutely. And Uncle Warren keeps stepping in.
He does.
Right? He keeps buying more oxy. So definitely don't want to fade Uncle Warren.
So when you say the 74 level in crude, nobody wants to fade Uncle Warren. Don't fade him. When you say 74 in crude, again, we're talking about those prior cycle highs, those 2018 highs.
Yeah, around 70. Yeah, exactly.
So will you look at something like heating oil, gasoline, for maybe some leading evidence there? And what are you saying?
They're holding.
Okay.
They're holding above their prior cycle highs. Both have experienced significant selling pressure in recent months, but
I mean, they're nasty drawdowns from the highs early last year. Both of these things.
Yeah, and we got to remember these are commodities.
Okay.
Commodities are going to go. They're going to go through these boom and bust cycles. So to see a big sharp decline, I mean, that's just commonplace.
Yep. All right, so basically, we have our lines in the sand here, some really clean levels. If they break and we start to see these levels being violated, futures in the stock indexes, what's the playbook then? What changes?
Are cyclicals in general falling in that environment? Are financials breaking too in that environment, right?
Most likely, and that's the one thing that I'm noticing in the commodity space is we're not getting a healthy rotation in pro-cyclical groups. Like, as energy continues to come under pressure, we're not seeing a bid in Dr. Copper or other industrial and base metals. We did for a little bit early on in the spring, but that strength has waned. Copper breaking down in the past few sessions, undercutting some key pivot highs. That's not that's not a characteristic of a healthy uptrend.
Can we talk about these divergences? Stocks really doing well in the face of a rising dollar this week. Also, tech stocks crushing it, making new 52-week highs despite rising interest rates this week. Let's talk about these divergences. They definitely stand out to me.
Right. Tech and growth continue. Just the whole area continues to lead off the bottom right now. But other long duration assets aren't playing along. TLT bonds aren't playing along. You talked about Bitcoin earlier in the show. There's divergence there. Bitcoin, why isn't Bitcoin catching higher? I think that's really, really interesting. That's two of the key divergences right now that are top of mind.
Do you think it's sustainable or do they revert?
I think they ultimately revert, and we see these divergences all the time. It's common for correlations to come and go, to break down. I don't want to make the bet that these divergences between long duration assets are going to remain in place for an extended period of time. Either TLT catches higher to tech stocks and growth names, or we get a failed breakout in communications. We get a failed breakout in XLK, and they start to catch lower to bonds.
I'm with you, Ian. I mean, these relationships have been very good to us over the past several years, right? Wherever the dollar's been going, it's been telling us, everything we need to know about the broader market. What rates have been doing have really, made the call for tech stocks and growth. JC's over here telling me this morning that his friend told him that maybe these relationships are changing and will diverge or
First of all, it's not my friend; it's our friend, Mark Dow. He's friend of the show, friend of ours. Like a friend of mine, friend of ours.
Yeah, so,
and he's a really smart guy.
Yeah,
I really like Mark Dow.
Yeah,
we got to see it though, right? I mean, it's been 4 or 5 months that maybe say tech and bonds are moving in opposite directions.
Well, throw up the chart of the 10-year yield and the U.S. dollar index.
No, tech and bonds moving in the same direction. Tech and rates moving opposite direction.
No,
and I think this is really what's going on here.
In this year,
right? I think this relationship starts to break down at some point, but there's just no indication right now that rates in the dollar are diverging. It's quite the opposite.
You know that both of these things are at fresh 2-month highs.
Yeah.
Stocks and tech keep doing well. So that's what I'm saying. Like, how long do we need to see this where we finally say, hey, correlations change? Like, when do we make that determination? Clearly, everyone's in agreement that it's more than a few days. But it's only been a few days, right? Or a couple of weeks, maybe.
It's been going on all year, though, at least that's what I was saying, between tech and bonds, right? Bonds have been making lower highs all year, kind of struggling, and tech has been just screaming higher, making higher highs.
Right? Yeah, but bonds are carving out a healthy base. I mean, look at that TLT chart, just pounding overhead supply. I think it's just a matter of time before TLT, and just bonds in general start to catch higher. When I see tech and I see growth, they're leading the way. That's where my head's at right now. They're leading the way, more forward looking, and the other long duration assets are going to ultimately catch up here at the latter half of the year.
Can we talk about the Fed Fund futures curve? Are we talking about rate cuts later this year? Is that what the market's pricing in? Is that why tech's doing so well? Is that why? What?
Are you excited to listen to Jerome Powell at 11 o'clock?
What's really interesting is that right after the most recent hike a couple weeks ago, Fed Fund futures were actually pricing in 8, 9, 10% probability of a rate cut in June. Last week after all this economic data came out, and I guess it was positive. I don't know, pay attention, but the market immediately started to price in the possibility of a hike next month. And I think a lot of that's pretty much the foundation of what we've seen, at least from a fundamental perspective of what's been driving the market over the past week or so. I really don't think it has anything to do with the whole debt ceiling saga.
Raise the roof.
I think 46% chance is what the current Fed Fund futures is saying.
It continues to rise.
46% chance of what? Hike?
Of a hike.
Of a hike.
Next month?
That's wild.
I think the big piece of data there is what's happening with lending. I think the Fed wants to see lending really get reined in here, and if they don't, I think they want to break another bank. Sorry.
Looking forward to talking to John Netto about this next week, Spencer.
Yeah, Netto will be on the show on Wednesday. Ian Culley, though, will be on in this very channel with me at 11:30, about an hour and a half from now, 11:30 a.m. Eastern time for What the FICC. Ian, I'll see you there. And thanks for coming on the morning show.
Before I go, can we take a look at Bitcoin and gold real quick?
Yeah. I like
chart
it.
real quick.
Yeah. You tell them. You tell Spencer we're going to look at that chart.
So, Bitcoin diverging from tech, But man, the positive correlation, this is a 63 period rolling correlation here on the bottom pane, pretty strong with gold. And we've seen that weakness in gold hit over the past week and a half.
With the dollar strength. So the dollar strength has hit gold, didn't hit stocks.
Yeah. Or Bitcoin. Ian, which one of these is a better inflation hedge?
Stop it.
Neither.
Stop it. Somebody smack them. Stop. Maybe a hedge against profitability, perhaps, that gold, but definitely not a hedge against inflation.
One of these days. One of these days, JC.
All right. Thanks
All
a
right,
lot,
I'll
Ian.
get out of here.
Love it.
All right. Again, Ian Culley hosts What the FICC every Wednesday and Friday at 11:30 a.m. Eastern Time. He also is the head of fixed income, currencies, and commodities at All Star Charts. You can find his research there. Okay. It's 9:52. We didn't do talking the tape yet, and we also didn't do any questions from the chat. If you have any questions in the chat, now's the time. Drop them in. I want to save a minute or two if we can for recess. But Strazza, do you want to talk tape, or do you want to go right into chat stuff? I'll leave it up to you.
Let's
Recess.
all right, we could skip it today. It's a weird
All
take.
right, all right. We'll skip it today. Let's do so. From the chat, if you have any questions, chat, speak now. Forever hold your peace. I will give you guys a minute or two. I know if a few people are behind, I'll give you a minute to catch up and drop your questions in. In the meantime, let's go to recess here, and we'll spend like a minute or two on that. And because I have one thing, and it's Friday, so you should definitely have something for recess on Friday.
Recess.
I just wanted to mention that the current season of Dave, season 3 of Dave on Hulu, has been like primo, like fantastic.
What is it called? What is this?
Dave. It's about the rapper Lil Dicky. Well, it's his show. It's a show about himself, and
it's called
Dave. Yup, and
All
it's
right.
been like it's a half hour once a week, every Thursday or something, and it's been like ridiculously good. So check out Dave on Hulu.
Are you watching it alone? Or are you watching it with the wife?
No, the wife is watching. It's probably a show that's more geared towards guys, but it's good. It's very good.
All right. So yesterday was my anniversary, 4-year anniversary with my wife. How about that? Huh?
Oh,
Strazza, can we get some applause? Do we have any applause?
Yeah. So hold on, that's way too loud. First of all, second of all, so we went to a steakhouse, right? This is supposed to be like one of the fancier steakhouses in town. I got to tell you, I like my steak a lot better. And my hot take here is that you should not be afraid if you are in my position where you can make a better steak than these steakhouses. And it doesn't have to be better. It could just be more how you like it, right? It doesn't mean that my steak is better. I just like mine better. So does my wife, for that matter. And I don't get a lot of compliments around here. But I will say that steakhouses have a lot of other good stuff. You know, I went with the steak yesterday. I wanted to give it the benefit of the doubt. I was disappointed. Next time I'm going to get the pork chop or the lamb chop. Steakhouses have other things. And, you know, I've learned my lesson. I'm going to go into these steakhouses. I'm going to order other things. Like that's my new move. And I'm sticking to it. I think we need to be open-minded going into a steakhouse and not necessarily having the steak. How do you feel about that?
I like that. Dude, everything's good if you go to the right steakhouse, right?
Yeah, the seafood tower was ridiculous, dude. Right. This thing was oysters, lobsters, shrimp, like tuna. It was fantastic. Way better than the steak.
You go to the steakhouse for the sides.
Ribeye, you're gonna have no space for a tuna tower.
Yeah. Strazza, what do you got? You got anything? It's okay if you don't.
No, going to a steakhouse tonight. Should have some fun this weekend. It's my girlfriend's birthday today, so we're all going out with some friends downtown.
Oh, happy birthday, Rose!
And
I also, sorry to interrupt. Yesterday I cooked bacon in the air fryer for the first time. Changed my life. If you're not doing that, do it. All right.
Changed your life? That's aggressive. Changed your life.
Changed my life.
A piece of
Changed
bacon.
my life. Okay. Okay. From the chat, we got a few tickers in the chat. Somebody was asking about LNT. We have two stocks in the chat: LNTH and Exact Sciences. So let's bring up the LNTH chart we got here. Thank you, Alfonso. That was quick.
He's quick. I thought we had a live chart in here. You are quick, Alfonso. Whew. All right, 78 is the level here. We got those former highs. So look at this one, how it just stair steps higher over time. You know, respects these Fibonacci levels. I think this one's already kind of left the station. I'd rather be buying on weakness back towards those old highs around 78, 80 bucks rather than buying it here in the middle of this range.
Yeah. Clean level. It's a little extended here for an entry point, but the trend is certainly higher. Definitely pointing to higher prices. What about the Exact Sciences? Correct. I'm not to get all fundamental, and I'm not old enough for a colonoscopy, but my understanding is that this company is gonna provide me a solution where I don't have to get a colonoscopy when I turn however old I need to be to do that. Is that right?
I'm bullish. They better hurry up though, because we're running out of time.
Seriously, bro, I'm getting older every day, man. You better get their shit together. Oh, see what I did there?
I do see that. That was clever, JC. I don't know if we have an Exact Sciences chart, but who asked about it?
Listen, we're back to that in Exact Sciences. We're back to that consolidation, where we were at the beginning of last year. Another good example of these big bases, right? You continue to see it again and again and again. It's messy here because there was so much churning at the end of 21, 22. So there's a lot of market memory here. I'm gonna take it easy with this one, as much as I'm rooting for it. And rarely do I have like this perma bull bias for something, and rarely am I rooting for a company to succeed. Usually I don't care at all. In this case, for selfish reasons, I'm rooting for it. Doesn't necessarily mean I'm going to buy it. Where do I buy it? Man, it's tough because even if we clear this 80, you got that former support at 90. Like, there's just so many barriers in the way. Like, you got to get past the defensive line, then the linebackers, and the defensive backs. Like, you're not just running free here. It's tough.
Yeah, if you want to get into this one, it does have a nice base. And I would use the earnings gap up lows because they also kind of coincide with that 38% retracement level. I would keep it tight there because you don't want to be holding this thing if it's going to go back and fill that gap.
77. I'm with Strazza 100%. If you need to be in it, that's your stop. If you start filling that gap, that's no good. 77. Nailed it. Couldn't agree more, Strazza.
Both of these stocks, some nice ticker requests. They're in the right space healthcare wise because healthcare is so bifurcated right now. JC, we've been talking about it. This is a diagnostics and research name, and I think medical device. So swimming in the right ponds here.
All right, we made it through the first week of this show. Tell us what you think. If you like it, if you have any feedback, good, bad, or otherwise, you can always email us for any reason whatsoever at questions@stockmarketmedia.com. Thanks to our guest today. Thanks to Brian Lund. Thanks to Kimmy Sokoloff. Thanks to Ian Culley. He is JC Parets. And the other guy is Steve Strazza. I'm Spencer Israel. Drop us a like. Subscribe to the channel. There's more videos coming every single day. We're doing more stuff. Guys, any final thoughts?
I like how you called him the other guy. That's good. I like that.
Well, all right. Next time you're the other guy, and he's Steve Strazza. You're the other guy. All right, everyone. We'll be back a little bit later. Happy trading. Good luck, and happy Friday.
YOLO responsibly.
Run it. I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah.